All right, welcome back to another episode of Wolfe Street. For those of you that don't know, my name is Wolfe, and for those of you that do, thanks for checking me out again. As always, you can check me out on social media at EveryTimeICash. That is all social media platforms at EveryTimeICash. You could also check me out on YouTube at EveryTimeICash, and you can check me out online at EveryTimeICash.com. Feel free to reach out to me on all social media platforms at EveryTimeICash, or reach out to me at EveryTimeICash.com/contact. So as I said in the intro, if you're listening to the podcast, this is going to be a quick little emergency podcast video, whatever. Donald Trump is in the hospital. He's in the hospital after contracting COVID. For the last 24 hours, there's been a lot of confusion. There's been a lot of misunderstanding and assumptions about how bad it is or how bad it isn't. So I just thought it was really important to kind of just go over the logic, at least on my end. I'm no scientist, I'm not a doctor, but on my end, I want to go over some of the logic about how things could play out and why it's important for us and how it's important for us. So first and foremost, on your screen, if you're watching, this, as always, this video is in podcast form on my podcast channel, or you can check it out on YouTube. So if you're listening to the audio, please feel free to check out the video. It could be a little bit more helpful. And if you just want to listen to the audio, feel free to listen to that as well. So the importance of all this, of course, is the President of the United States is in the hospital, and it appears to be serious. So I don't need to emphasize how serious that could be for the country, the world, and in turn the markets, but that is the sticking point. That is the importance. There are a couple of different ways to view it. First and foremost, there is an election that is a month away to the day starting today. And then second of all, another way to view it is how is this going to be perceived moving forward for allies? How's it going to be perceived by the general public, and how's it going to be perceived by market participants? I'm going to table allies and the general public because this is not going to be a political referendum. I'm going to try to focus solely on the market perspective. So with the market's perspective, the one thing that we know from a market's perspective that the markets don't like is uncertainty. And this news, when it first broke, kind of smacked the futures market. Not kind of, it did smack the futures market. It wasn't a limit down, but it was just about halfway there, a little over 2.25% for the tech sector in particular, and for the markets in general. The importance here is the markets do not like uncertainty, and this creates uncertainty. This creates uncertainty across the board. Number one, how sick is he? Number two, how much did he know and withhold? Number three, who else did he get sick? Number four, how sick are they? Number five, if he dies, hopefully he gets through it. No one should wish death on anybody, but in the event that does unfortunately transpire, what happens, right? So like, do things move forward with Pence? Does the Republican Party try to flip and go with one of his children? Does somebody else step up? What happens? Do they try to say we should postpone an election? I don't know. I don't have the answer. Outside of that, does this strengthen a Biden-Harris potential presidency, or does it stall it? I don't know. I don't have an answer. How do they move forward? So there's a lot of uncertainty is the whole point I'm getting at. How do you price that uncertainty when you can't necessarily know what it is that the uncertainty is, right? So without a potential outcome to plan for, it becomes increasingly difficult to plan for the variable outcomes that could come out of this. So that is the fundamental sticking point and the fundamental important point to remember about all of this. The second thing is that there appears to be differing individuals within his own staff, party, whatever, that for whatever reason want to have varying opinions that don't necessarily coincide with the information that's being presented to the public. I don't have an answer again about why that is, and I don't really care why that is. All I know is when that sort of stuff happens, it creates a bigger cloud of uncertainty. So as long as that continues to transpire and as long as that continues to take place, that uncertainty continues to escalate and elevate, and that creates further confusion in general, but for our sake and importantly in the market. On the screen, if you're looking at the YouTube, you're going to see the NASDAQ 100. We had a very clean uptrend channel that started in April, from April 8th all the way until September 7th. We had a very solid uptrend. For the last month, all we've done is chop around. I'm going to zoom back for you. All we've done is chop around from that breakdown point to the prior channel top, and now we came right back to that breakdown point where we stalled again. So that's all we've done. We broke down, we checked this channel, we came back to the breakdown point, and we stalled. Currently, the NASDAQ is below its 5, 10, 20, 50 moving averages. So 5, 10, 20, and 50-day moving averages. On the prior channel top, it's going to coincide with the 100-day. My guess, if I had to price it, barring some sort of miracle recovery over this weekend, my guess is that the market in general, for the NASDAQ, that is, will go back and retest this 100-day, and we'll go back and retest this channel top. This is, people will always try to associate some sort of reason for the move, and will attribute some sort of headline for the weakness. But the NASDAQ in general had been severely overbought back in early September, and has been slightly underperforming relative to other sectors. So it's important to note that there will always be a catalyst, and that catalyst will always get assigned to whatever the move is. But that the fundamental weakness in this case was there, and it wasn't like, overbearingly weak. But there was some underperformance in some of these stocks, particularly the big ones. The last time I had a video, I went over the weights of the FANG, MAGA, whatever you want to call them, stocks, and how big they were relative to the rest of the market. But it's important to know that as we stall, if it's the big stocks that end up stalling, if it's these big heavyweights that end up stalling, it becomes increasingly difficult for the overall market to perform. So let's pull up. So this is the S&P futures chart. Again, we had this. I'm going to show you. We had this megaphone pattern set up, and we essentially blew out of it in early September. So in this case, we blew out of it on September 2nd, and then we came right back in on September 3rd. In the S&P, we came back and we retested a prior breakdown point that we had in February, which coincided with the resistance that we had on the way back up. And then we just simply went back and retested our 100-day, which held. And then we got back to a prior high right here, and ultimately stalled. So if I'm going to assign levels to this for you, your 100-day is going to coincide with that resistance level that we had, which is basically 32.25, give or take. 3,400 is prior high resistance, and we seem to run into that wall every time we get there. if we were to break 32.25 to the downside, essentially you're just pulling up moving averages and you're seeing if they hold. So essentially you want to see the 3100 level, which is the 200-day moving average, hold for the S&P. If for whatever reason the news cycle starts to get better, if things start to not seem as bad as they do now, you're going to look at resistance being this broadening top here, which coincides to basically that 3550 level. And then above that, you're going to see, 3560 or 3600, 3590 as resistance. So look for this 3400 level to be a line in the sand, and then look for this 3225, give or take, level to be a line to the downside on the ES futures. If I go to the S&P 500, show it to you a little bit more. Again, prior high 3400, and then essentially for this one, I want to see this 100-day, which is call it 3250. Kind of act as support, and if that doesn't hold, then I want to see 31. First of all, I want to see 3200 hold, and then if that doesn't hold, I want to see 3165, give or take, hold, and essentially 3150 hold to the downside. If these things hold, we could see a little bit of a snapback. We could see some performance from that point on, but it's important that these levels do hold for things to move forward. Another thing to watch out for here, I'm going to zoom out for you so you see this a little bit clearly. If I throw this 145 line on the IWM, so I'm going to throw, where is it here, 145, give or take. So if I zoom out, 145, give or take, has been critical support on the IWM. And if I just show you in the last several years, I'm going to highlight it here with these arrows. When we break this level, it gets bad. So in the case of the IWM here, look for 145 to be, I know the line on the chart says 144, so you can undershoot it if you want, but essentially that 144 or 145 level is going to be a line in the sand for the IWM. If that line seems to break to the downside, I'm going to look for trouble in the market in general and in the IWM in general as well. These are the things that I'm looking for. These are the things that I'm watching, along with how Trump ends up doing, if he's going to progressively get worse or progressively get better in the hospital. If things start to deteriorate to the and get worse for him, look for more confusion and more downside risk until the actual election, or until they decide that Joe Biden is probably the incumbent, and then at that point, the market will start to price in that presidency. If things get better and he gets better and starts to progress to become better, then it's going to be dependent on how this election plays out. And we go back to the old problems that we had just a week ago with transition of power, how things are going to go, and how's the election going to play out, who's going to win, yada, yada, yada. So these are some of the ideas that I have in my head and how some of the things that I'm monitoring moving forward. It's important to know what kind of trader you are in this market. Understand if you are a trader or an investor. If you are an investor, the important thing to remember is that liquidity is going to be important and credit risk is going to be important. So we have an unbelievable amount of liquidity in the market. As long as that liquidity stays firm and as long as the Fed's there to help you out, weakness is to be expected as a buying opportunity for the long term. This is in unison with a global recovery. Now, that said, there are underlying risks to the market on the short term, so you want to play the ranges. So in the case of the IWM on the screen, for example, 145, look for that to hold. If it holds, you can buy against it. If it fails, look for it to sell. And with the markets, I'll pull them up again for you, but essentially you're looking at the 100-day to hold for the S&P 500. If that doesn't hold, then look to these prior levels to hold in the market. So we had a 32.10 basically level hold just about a week and a half ago. Below that, look for 3160, 3150, and below that, look for that 3100 200-day moving average level to hold. On the Nasdaq, again, I'm looking for this monthly chop zone. Either we break out of it and we continue, and in that case, I want to see how it tests this 12,000 level, or I want to see how it holds this prior support level, or this prior resistance level, this prior channel top, and the 100-day in the Nasdaq. Beyond that, like I said, there's been some notable weakness in some of the FANG stocks. In this case, Apple, for example, it broke down, retested this trend line, and it stalled and is now looks like it's going to roll over. In the case of Tesla, it closed right on its 20-day moving average. In the case of Amazon, it had been in this bear flag, wedge, whatever you want to call it, and we just started to break down out of it on Friday. I could go through these individually, and I'll create another video where I go through them individually, but I'm just giving you a little bit of a concept here. If these start to drag, it's going to be difficult for the market to continue to go higher. But that being said, consumer discretionary and some of the industrials and transports have been on fire. So there appears to be some sort of strength, a broadening strength in the market outside of the FANG names. But these are important things to remember, and these are important things to look for. And just remember 145 on the IWM and the levels on the S&P 500 and on the Nasdaq. I will create another video where I go through charts more concisely and more in depth. Just wanted to create this quick one so that you guys can kind of get a little bit of a logic tree on my end and kind of walk through it with me. If you have any questions, comments, concerns, reach out to me at EveryTimeICash on all social media platforms. If you want to reach out to me directly, you can check me out, www.everytimeicash.com/contact. As always, thank you for checking me out. Thank you for your time. Stay safe and stay profitable.